El chakra es un camión de remolque.
AG. 1 2 1 2 check 1 2. Good morning to my man David. How you doing, brother? You know the rules of the chat. Introduce yourself in your city upon entering. That's rule number 1. Good vibes only. And number 3, talk to each other, not just me, to build the community. That's right, David, helping me out, my man. I appreciate you, dude. David, you are number 1 MVP this morning. I appreciate you, dude. We got a bull trend, guys. We got a bull trend. Yeah, let me figure out how to do that. I think I can also make you a moderator, David. Would you like that? There it is. I'm gonna add you as a moderator, David. David, I just made you a moderator. Tell me if you can pin that yourself. Does it allow you to do so? All right, let's see. Let's get this camera going. We're a little bit behind. Bear with me, people. There we go. Hey! Check. Some technical difficulties this morning, but we're working through it. Yeah, David, no worries, man. It's all just do whatever you can do, man. Just do whatever you can do. But does it allow you to pin the are your permissions allow you to pin? Okay, we need some more tempo. This music's a little sleepy. There we go. That's right. 3. Okay, good. All right, so we're locked in with that. Okay. Switch to that RTH. Okay, and as you can see, that's a bull trend. On a 15-minute chart, that's a breakout. Okay, so continuing from yesterday, right? Let's get that camera on. All right, David, let me try something else, man. Let me try something else, my man, David. We'll remove you as a standard, and we'll put you as a managing. All right, David, try it now, my man. Okay, so we're breaking out on a higher time frame, and you know, we're breaking out on a lower time frame as well. That's right. Okay. Boom. And here we are. We are day trading the SP 500 futures. Got a little caffeine going. What do you see on your chart? Now, I don't know what you see. You see what your eyes train you to see. That's the tricky part about trading. So, and you want to see what your eyes train you to see, which is your strategy, right? So, I'll just share with what I see, okay? I see a bull trend. That's what I see. Meaning, the lows are getting higher, and the highs are getting higher. We call those higher lows and higher highs, right? And if you want an easy, reliable way to know what you're seeing with that, just draw a line, connect the lows, and then make it parallel, which means you hold down the command key. And there you go. Okay, so there's your bull channel. The bull channel is a bull trend. Now, is this a weak trend or a strong trend? Well, one can determine whether a trend is weak or strong by looking at the pullbacks. So look at bar 6, bar 7, bar 9, and bar 11. Small. Pullbacks are small. We're in a strong trend. Simple. Oh. Interesting. So that's what we're dealing with. Now, if we look at a daily chart, which is always very important for me, okay, I want to see something that makes sense to me. So what I did is I drew a line here, okay? I drew a line here where we bounced. Notice we bounced. There was 1, 2, 3, 4, 5, 6 consecutive bear days. That's a lot of bear days. It's also extreme, right? Look to your left. Tell me if you can see in the past, since January, 6 consecutive down days. Can't see it. So here, this makes us in a trading range. But after you get a lot of selling and it's extreme, sometimes you get a reaction in the opposite direction. So that's what we're seeing right now, right? And this day is going to tell us a lot. So we're bullish at the moment, but how far are we going to go? That's a stop order, okay? So when you see that, you have the opportunity to buy, right? Now, stop orders tell you a lot, because if the stop order succeeds, then that's confirmation of the strength of the trend. However, this is also a wedge top, and there's a lot of selling, okay? So the alternative is that the stop order fails. Now, what does it look like is happening right now? Does it look like it's failing? It doesn't, but it could. We gotta wait and see. Wait for the close, as I'm always saying. All right. Continuing to break out to the upside. Now, I do not see this reversing at the moment, because all we can go off is what we see. And what we see is at the moment, the market is moving up, and it's moving up strongly. Few features to point out on the chart. 1, gap up open. Let's mark it. Oops. $20-point gap up open. Put it in green because that's bullish. Okay. So that's a breakout. So see the pattern we're in. Yesterday we had a big, strong bull trend, real strong bull trend. And then we sold off towards the end of the day. Okay. But it wasn't a strong sell-off, right? Because notice the bull trend started down here. So 50% pullback would be, you know, commonplace. And often the market does pull back 50%. So look, that blue line is right at 50%. So we pull back almost exactly 50%. In fact, it might be exactly 50%. Okay, that's how reliable some of these little rules of thumb are. So strong bull trend yesterday, 50% pullback, and then we've been going up ever since. So this was after hours, right? And then the market opens today, the New York session, and we've been riding up ever since. Since the open, we've been up 37 points. That's crazy. That's a strong bounce. Okay, so if you consider this a bear trend within a trading range, but yes, a down trend, meaning a bear trend, this is a pullback. Okay. So what's going to happen here? We don't know. But if we had a very strong trend yesterday, the likelihood of it just keep going, of the price just going and going and going, well, it doesn't go up forever, right? Beginner mistake. Beginners think, you know, they see a strong trend, they think, oh, it's just going to go forever. No, that's not how it works. But it may go way further than you'd expect. It may not. So we got to wait and watch. A lot of trading is waiting. As I'm always saying, a lot of trading is waiting. Are you comfortable waiting? Or do you have to get in there? Are you interested in the skills that will make for a professional, consistently profitable trader? Or are you interested in being an amateur? This is a question you want to ask yourself. If you're interested in professional trading, you got to be willing to wait. You got to be willing to be selective. Essentially, you have to be willing to be happy doing nothing. Beginners hate doing nothing. Beginners want to click buttons and make money. But as my man David says, patience pays. Simple phrase. Easy to understand, harder to do. Easy to understand, harder to do. Now, what I'm waiting for here, okay, is I'm waiting for some type of resistance. Why? Because we went up 80 points yesterday. That's an 80-point rally. That's a big one. What do you notice about bar 12 and 13? 12 and 13, to me, 12 and 13, to me, look like 53 and 54. Look at 53 and 54. By the way, let me help us out here. Start over. high of yesterday. So as I was saying, 12 and 13, to me, look like 53 and 54. You see that? Why? Because you had a long extended move up, and then you had the two biggest bars in the whole rally towards the end. This is often a climax. This is a sign of a climax. Okay. So this is what I'm waiting for. And we're going to wait and watch this close and see the strength of this close. How strong are the bears and how confident are the bulls? If we look at the last time we saw this pattern, which is two very strong bars, in fact, the biggest two bars of the series of bars of the rally we're talking about, and then what happened at the end? We had this climax, right? It's like the big blast at the end. I'm always joking. Right. You know the big blast at the end, guys. You know about that, right? Right. So you had this big blast at the end. I mean, look, it's relatively much bigger than the rest of the bars in the series. A breakout or a trend is just, you know, on a higher time frame, this whole thing would be a breakout, right? If you went to like an hourly chart, like, you know, the two biggest bars at the end of a trend, and a big active behavior. Notice here, we went up a few more candles and then that was it. Okay, so that was the whole trend. See, on a hourly chart, that's it. It's just one big breakout. Okay. So we're gonna wait and watch the strength of this close, right? And often what I'm looking for is a close below the prior candle. That's often what I'm looking for. Patience does pay, doesn't it? Eight seconds left. Let's see what kind of close we get here. No, David, it's me. $14 did not close below 13. So notice if we go to 52, 53, 54 is actually a weak close as well. We went up a few more points, then we made a double top, and then we came down. So maybe that happens. Maybe we just keep working higher. That's possible too. But we gotta wait and see. 3 pushes up. First decent bear bar on the chart since the open. Yeah, I apologize for the lag, but that's how it's gonna be today. Unless I cancel the stream, right, and then restart, which would kind of be a pain in the ass, so we'll just have to deal with it, but it's all good. So 14, I was looking for a close below the prior candle. Didn't happen. So we wait and watch, and we see what 15 looks like. Now the challenge often, as my man David said, patience pays. The challenge is actually executing that principle, right? And what does that mean? It means waiting for the candle close. If you talk to the pros, if you talk to the professionals, they will tell you. Well, I can just say what my mentor says. My mentor is the legendary Dr. Al Brooks, the grandfather, the godfather of price action. Dude's been trading 35 years, right? Written 15 books. And he says it real simply. He's like, wait for the bar to close, make a decision. Wait for the next candle to close, make another decision. Simple, right? But easier said than done. Okay, so a minute 19 on this candle. We're gonna wait until this candle closes, as I'm saying, to really make a decision. Now, what we're trying to assess here is if the bears have any kind of conviction, if the bears have any kind of momentum. There's always a pullback. But if you look at 15, as we come into the last minute of this candle, bears have not even, the bulls have not even allowed 15 to go below 14. Okay. Let's see if that changes as we move into the I wonder how awful the lag is. If I gotta restart the stream, I'll do it. I'll check. Even allowed 15 to go. Okay, lag's not too bad, right? All right, so here we go. So the first sign of bear weakness, okay. $7 points. Possible we pull back to the EMA. $50.87. And I'm getting short. So here's the entry. Here's the target. If we go R1, we're looking at a target there. This, if it was strong, would have been trend continuation, right? Because there were bulls that would want to get in on the pullback, right? They were sitting on the sidelines here. But this is a weak bull bar, right? Could not even close past its midpoint. So when that happens, when trend continuation fails, which this would be a sign of failure. We don't know if that's what's going to happen, but that's a sign of it. We got to trade the signals. So when you see a signal, a trend continuation is weak, it creates a greater possibility for a move in the opposite direction. $89.25. There you go. And what do you see happening now? You see buyers down there. Which means you did not see buyers above 15 or on the close of 15. But we could have buyers below 14. I'm looking for selling pressure, and this close will tell me if we're seeing selling pressure or not. So let's see if the bears have some sort of momentum, or if the bulls are still confident. Looks like they're still confident, right? 5 seconds coming in. If you're a bear, I mean, I don't know how confident that would make you, right? So market often tries to reverse at bar 18. We're coming into bar 18, so possible attempted reversal, but bears not looking strong yet. Bulls still controlling the market. Bears could get a pullback to the EMA, as we've been saying, but let's wait and see. If you notice, my target's a measured move. And look what happens every time we come down here. We're bouncing, right? So Another small pullback for the bulls. Let's watch this close. <clears throat> 16 seconds. Bulls buying into the close. Notice. 5 seconds left. Okay, so 16 closing above, 17 closing above 16. Good for the bulls. So this will either be a trading range or the bulls will get another push up. Let's see. Here, we got 2 bear bars. We got a little bit of selling. Here we got a little bit of selling. And then we went a few more points up. Then we made a double top. Then we moved down. So let's see what happens here. We got to wait and watch. Here we went, another 6 points up. Marky usually tries to reverse on bar 18. Doesn't always reverse, but usually tries to. Let's see if there's bars above 14. So we could see The bear's getting that final push up here and then a reversal, but we gotta wait and watch, right? I want to see if there's bars above 13 and 14. So far, strong buying. This is what I'd be expecting. We go a little bit above and then come down to some degree. But this is a strong trend. And we have not broken the trend line yet. Okay. So you can't really expect shit until you break the trend line. I mean, look at what happened when we came close to that trend line. Bulls start buying. So bulls are running. Bar 18 here. Last 10 seconds of the candle. Let's have a look. Bull's getting another breakout. New highs. But will there be selling? I wouldn't count on it. Could be. But I wouldn't count on it. The reality is no one knows, but we just gotta wait and see. Wait and see what the signal. What happens with the signal? The rule that will save us all is until we get a break of the trend line and a retest of the top. So a break of the trend line and then a retest of the high. We're gonna expect more buying. We have not seen a break of the trend line yet. Maybe we'll get it here, but okay. So I drew this box to signal trading range price action. And what we're seeing now is trading range price action because we went up, went down, went up, went down. But if this is the trading range, and this is the first break of the trend line, will there be buyers down here? Likely. But let's see it. Bears want to test to the EMA. So if we went, if this is the bottom of the trading range, now this might be the bottom of the trading range, but if this is the bottom of the trading range and the ATR is 5.5, that'll put our profit target at 50.99. I'm long. Profit target's right here. I'm trading on 2 screens today. We'll seeing what that's like. Likely we will I mean, it's guaranteed we'll touch the EMA. It's guaranteed means 99.999% chance. I don't think there's ever been a day where we've stayed above the EMA the whole day and never touched it. If you go back and look at the history of the S&P. So we'll touch that. We'll touch the EMA at some point, but when? So this is the market trying to reverse around bar 18. Now, if the bears can close below this trading range, that'll be something. But all this bullishness kind of gives you reason to do the opposite. Right? So will the bulls buy here? That's the real question. Or will the bears get continuation? If this is the trading range, there'll be buyers down here. If this is the trading range, there'll be buyers down here. So let's see. My target's here. My target's here. Betting this is the trading range, and we'll pull back to the middle. Three minutes left. See, now we have a break of the trend line, right? 19 broke the trend line. But often you get a break of the trend line and then a retest of the high. And then you get, you know, then you have like a case for a reversal that's more than just something tiny. You guys know the difference between major and minor reversals? One of the most important things in trading. It's been really hard for me to learn that one, but there's signs that indicate a major reversal and there's signs that indicate a minor reversal. Most reversals are minor. Bull struggling. But I always like to be real patient. I always like to wait for the close. Now, if 20 is a weak bear close, would that be good for the bulls or the bears? Obviously, be good for the bulls. But these EMAs, right? The average price is such a magnet. You got to expect there's going to be some attraction towards that. So like I said, either the bottom of the trading range here or the bottom of the trading range is here. Or neither. You know, we could be wrong about both, but that's my read. Price holding right around here. But 30 seconds into the close, let's see what happens. Get a slight move down. Six and a half, almost 7 points to the EMA. Three, two, one. Okay. So Doji. Strong momentum to the downside? No. Bulls buying immediately. Okay, let's see if we get the move up. Remember, profit target 599 right here. Profit target right there. What'd you say, David? Patience pays? Bull trend, break of the trend line going back up to test the high. Commonplace. Super common price action. And then as the price moves our direction, we want to reduce our risk. Okay. Holding for this profit target, getting close. About a point away. Let's see if we get it. Three minutes left on the candle. I got two monitors. I got my open position on the left side. And we did it, baby. Order filled. Yes, sir. Okay. Nice work. Nice work, team. Simple price action. Strong bull trend. Break of the trend line. After a trend, you get a trading range. So if this is the trading range, my strategy says to buy below one of these candles. Okay? Could buy below, you know, could buy below, put a limit order below 13 here, right? I put a limit order below 16. Okay. So this is the trading range. So similar to, yeah, sort of similar to that, not exactly. So bull's still strong. So we're moving into, we're coming back up to test the high. So we want to see what happens here because we don't want to get tricked Sometimes you'll move back up to test the high and then you'll get the reversal down because you form a double top then. But let's see. Look at how strong the bulls are. Discipline was very strong on that one. Patience pays, David. Patience pays. You said it best. David, did you find out if you're able to pin comments? Looks like you are, right? Yeah, David, that's a really good question. If there's something important to learn about price action, in my opinion, it's the difference between major and minor reversals. It's such a huge key for looking at a chart and understanding what's happening. And it's such an important thing to avoid, like pretty much some, if not almost all of the mistakes that beginners make. Okay, thanks for letting me know. Pen. All right, message penned. Okay. All right, so David, the difference, think about it, right? The difference between major and minor reversals, think about it. First of all, David, do you prefer to trade with the trend or against the trend? Let's start with that. In your strategy and your way of trading, do you prefer to trade with the trend or against the trend? There's two ways to trend. Sorry, there's two ways to trade. With the trend or against the trend. And I don't know about you, but generally I like to trade with the trend. Yeah, same. David said with the trend. So mostly, right? So for me as well, I like to trade with the trend. Mostly, right? Like you said. But the key, in my opinion, is I like to do what the market's doing, right? If the institutions are buying, I want to be buying. Yeah. But the question is, how do you assess a reversal, right? That's what we're saying. How do you assess a reversal? So let's take what we're seeing on the chart right now for an example. You got a bull trend, obviously, right? Now we can connect the lows and that'll give us our trend line, the bottom of the channel, right? So a reversal would be the price going in the other direction, right? So let's look at some minor reversals. Let's assume a rule, which is that most reversals are minor. Okay? Most reversals are minor, aren't they? So that's a minor reversal. Technically, that's a minor reversal, right? Because we had a bar in the opposite direction, a close, bear close, right? And a bull trend. Okay, so let's look at all the bear closes. Reversal, reversal. So look at this little teeny, tiny, puny little baby candle, right? Obviously, that's a minor reversal. How about this one? Minor or major? Minor. How about this one? Minor or major? Minor. I mean, these are all almost nothing, right? Look at the bar bodies and look at the size of them. They're almost non-existent. 1, 2, 3. So you have 3 minor reversals, which is showing the opposite side is very strong. In this case, the bulls, right? On my chart, bear bars are blue. Bear bars are white. Sorry, bull bars are white. Bear bars are black. Okay, on yours it might be green and red. However, then we got this guy. Okay, now is that a major or minor reversal? I mean, it's much bigger than the past ones, right? But how do you determine a major reversal versus a minor reversal? Is you have to weigh the strength against the other side. So that's the answer. You got to weigh the strength against the other side. And also take the context into consideration. In other words, are we in a tight channel or a strong trend? Those are the same thing. Tight means small pullbacks like this, right? 1, 2 bar pullbacks, 2 bar pullback, 1 bar pullback, 1 bar pullback. Okay. Now this one is much bigger. This bear bar is much bigger than these guys, as we're saying. However, did they get 2? Did the bears get consecutive? No, the bulls bought. They disrupted that momentum. Okay. So even this, even though it's like 5 times the size of these candles, it's still a minor reversal. Why? Because as I'm saying, relative to the other side, So that's the first thing is you weigh, you assess the strength relative to the other side. And you could do this visually. It's not hard to do. You just say, okay, you could actually measure it if you wanted to do it. Like, look, so the size of these candles, 16 point. This is a 16 point move up, right? So let's measure the move down. 6 points. Now, did 14 close below 13? No, it didn't even close below 13. In fact, this shows you, this tail shows you there was buying into the close, which means there were bears that were hoping for a stronger move down, and they actually were exiting out of some of their positions here. And also, as you got close to the low of 13, it's reasonable to think that there were some bulls buying down here. Okay, so there's 2 things to look at with major and minor reversals as far as my understanding goes. One is you weigh the strength relative to the other side, as I just explained. And then the other thing is, have we gotten a break of the trend line and a retest of the high? That's like a rule, okay? And there's that short video on my channel that seems to be going viral. Oops, seems to be going viral and just not slowing down. We just hit 1 million views on this thing. And the video, all I did was share this rule that if you want like a good way to trade reversals, right? And if, in other words, if you want to trade a reversal that's actually going to reverse, wait for a break of the trend line. Wait for 2 things. This is what I say in the video. And this is the rule. And this comes straight from Al Brooks. So I got to give credit where credit's due. Never trade against a strong trend until you get 1, a break of the trend line, like this, and a retest of the high, which is what we're doing now. So put these 2 things together. Look at the reversal, which is the break of the trend line. The first real major reversal is here, right? If it doesn't break the trend line, maybe don't even consider it a reversal. Just consider it a pullback. I mean, it's technically a reversal, but you know, that's profit taking, right? Bulls bought, they took some profits. Bulls bought, they took some profits. So this isn't really a reversal, meaning the other side gaining momentum as much as the bulls just taking profits along the way as we continue to move up. So what we're looking for if we're going to trade a reversal and we want to trade with the trend, meaning we want it to actually reverse, is we want to put these two things together, right? So look at the strength of the first major minor reversal. I call this a major minor reversal, okay? Because it is a minor reversal, but it's the biggest minor reversal, right? I mean, look at this reversal compared to the rest of them. So I call that a major minor reversal. It's still a minor reversal, but it's the biggest one, okay? So as soon as we get a major minor reversal, now then assess the strength of even that break of the trend line. So how far below did we get below the trend line? 7 points. That's a small break, okay? So yes, it's a break. And as we come up into these highs here, it's possible that we can sell off and get another move down. But the bulls are still strong. That much we know. Now, will there be sellers up here? It's possible, right? It's definitely possible. But let's see. The bulls seem to be carrying this momentum. And they're just not slowing down. So let's watch this close. Now, mind you, this is a retest of the high, right? Trendline break. Trendline break. Burp. Retest of the high. But look at 23. Strong close. So. No sign of selling pressure yet. Which is why I bought down here. Right? If you remember, I bought down here because that was the first major, that was the first break of the trend line, actually. The first actual break of the trend line. We didn't even break the trend line, right? The bulls were buying anytime we got close to the trend line. But when you get that first break of the trend line, you know, most often you're going to come back up to test the highs. So there was two reasons why it made sense to buy down there, right? One, because we know that pattern. Trendline break, retest of the high. Forming a double top. That's how you get a double top. So that was one reason to buy down here. Another reason to buy down here. Another reason to buy down here was because after a trend, you get a trading range, right? The market goes trend, pause. Pause is a trading range, goes sideways. Now this is going, you know, down, up, down, up. So we're just kind of staying in this range here, and that's a trading range, okay? So that's the pause, essentially. And after you get a lot of up, you will get some sideways. And the market will either decide to go up more or reverse in the opposite direction, okay? So the way I trade a trading range, and mind you, I drew this box here, assuming that we had a move up, trend from the open, we went up 40 points. If we rip 40 points up, straight up, and we went up like 80 points yesterday or whatever, it's gonna be a trading range at some point. In fact, we usually go sideways for 15 candles. So the trading range could last to here, right? So we got the retest of the high, and now, you know, we're in this trading range now, and you can see it, buying and selling, buying and selling. But buyer's still strong. Suddenly our stream is healthy. Imagine that. We went from lag to no lag. How does that happen? No idea. Some problems fix themselves. Okay, a reminder to everyone else. Let us know what city you're streaming in from. 3 rules of the chat. Introduce yourself and your city upon entering. Rule number 2, good vibes only. Rule number 3, talk to each other, not just me. Hello. Okay, so let's actually redraw this trading range a little more accurately. So that's the trading range at the moment. Market deciding, will we go higher or will we reverse? I'm expecting a pullback to the moving average. Why? It is guaranteed, but we don't know how it's going to happen. We can dip down to that moving average, or we can just keep going sideways. And the more sideways we go, you'll notice that blue line, which is a moving average on my chart, the more sideways we go, the more it pulls that average price towards it. So there's one of 2 ways that'll happen. All right, now we got a decent sell signal, right? Strong bear bar closing on its low. Hasn't happened yet. Still in this trading range though, so. All right, and we're in. So press here. 4. 296. There you go. Bull still strong. It can really blow your mind how strong the bulls can be. But it's good to remember there's always more institutions that are net long because it's the American economy, right? So that's a good thing to remember. So in this trading range, we're going to assume this is a trading range until we break above or below it successfully. And as long as we're in this trading range, we're going to assume that the attempts to break above or below it are going to fail. Shout out to my man Monroe from represent NYC. NYC in the house. What up? Monroe, thank you for being here. Welcome. Bears trying to get a test of that moving average. Okay. Moving down. My profit target's here. Will we hit? Yes. All right. 2 wins now, baby. Yes. We like it. We like it. Life is good. just want to point out, okay, so I got short here, profit target was here, and we hit that. I want to just point out why, like how I set that profit target, because this is like my favorite thing in all of trading, okay? It's called a measured move. So this is a fib retracement. Look on my screen. Fibonacci. See how it's two equal distant moves? See that? So this is often how I will set my profit targets. So I'll take this guy. Let's make it a different color. Let's make it orange. So I'll take this guy, and if we get a move in a direction, and it's a strong move like this, like a bear bar closing on its low, closing below the prior bar, okay? After there was already selling up here, and there's good context for it. This is a trading range, this yellow box. In a trading range, you wanna sell near the top, that's up here. So we're close, you know, we're pretty close to the high there. So, okay, reason to believe that there may be some more selling. I'll take the fib retracement, which is, it's called a measured move, okay? And I'll put it, and I'll measure that candle, okay? And then I'll just wanna know, like, what would happen if we just doubled that move, right? So I did that, right? And usually I'll go from the open of the candle to the close, exclude the tail, oops. Exclude the tail, okay? So I'll go like that, okay? Which would put my profit target here. So I did, I just put my profit target here, right? That was a very quick one, okay? And there's also, you know, reason to be short here, expecting a test of the MA, but man, these bulls are still strong. So I'm happy to get out of that quick, because as you can see, the bulls were selling into the close of that candle. So looks like we want to go higher. Monroe, what are you trading this morning? Common pattern here, guys. Common pattern. If the market opens and starts trending immediately, we call that a trend from the open. In other words, if the market trends from the open, here's the open. Usually, within about an hour or so, we go sideways for about 15 candles. We've been sideways for Common pattern. And our stream is healthy. Wow. I wonder what happened. Because the stream was not healthy. We were lagging like a motherfucker. And now the stream's all healthy and shit. That's awesome. And the question is, will there be buyers down here? First touch of the EMA? Probably. My man Alex P from Tampa, represent. Alex, welcome back. Nice to have you back, man. Alex P is short. Alex, I'm waiting for a test of the low of this trading range here. Haha, my man Anthony, welcome back, dude. Welcome back. Thanks for being here. Good to see you again. It is a glorious day. It is a gloomy day here in San Diego. We get mostly sunny days. Today is gloomy and cloudy, but I'm grateful to be alive. Any day above ground is a good day, am I right? Yeah, that makes sense, Alex. What I don't like for being short here, which is why I got out so quickly, is the strength of the buying. And if you look at the daily chart, this is extreme. 1, 2, 3, 4, 5, 6 consecutive bear bars. Right. That's extreme. This is clearly the trading range. The market's shown us that. In a trading range, we spend most of our time right around the middle. Right there. Right in the middle. And if you're right in the middle, best thing to do is nothing. In the middle is the worst possible probability of the entire trading range. Okay, so look, another reason why I don't like being short here is we're making higher lows. So this is more of a bull channel. This is more of a bull channel than a trading range. Trading ranges and channels are kind of the same. It's also a triangle, right? So we can look at it that way. So let's draw the triangle, okay? So there's your triangle, right? So let's see what happens when we get to those lines. That'll tell us something. Again, as I've been saying, we will touch that blue line. We will touch the moving average. 99.9% chance. There's no day that the market's ever stayed above the moving average all day and just never touched it. It's like maybe one in like 100,000 or something. It's 99.99999. I'm repeating percent that we will touch the moving average at some point. We just don't know exactly how it's going to happen. If I'm short, I want to see some selling pressure, meaning I want to see the bears gaining momentum, meaning I want to see the bear bars growing in size. The bear bars start shrinking in size. This was good, but then look, lack of follow through on the bears, right? Little tiny doji, and then look, bull strength. So bulls buying near the low, and then the bears getting off 2 consecutive bars here again, but shrinking in size, right? So probability is about 50-50 currently. Bears breaking below the triangle, but will there be buyers down here? That's what we're looking to see. What happens, guys, if you watch my drawing trend line tutorial, if you haven't watched it, I recommend going to the channel, watching the tutorial on how to draw trend lines. Important information there. The third step, okay, the third step is watch the reaction price to line. Watch the reaction price to line. So that's what we want to do here. We got the line, we drew the line, we connected the lows, right? And we connected the highs. Step 1, step 2. Step 3, watch the reaction price to line. So let's watch. 2 minutes left on the candle. So far, bulls buying as soon as we touch that line. But let's see. By the way, is this the trading channel with the best beats? You guys tell me. If there was an award for the best beats of any trading channel, would we get that? Again, we're watching the reaction price to line. We're watching the reaction price to line. We're 3 minutes into the candle, almost 4 minutes into the candle, and the bulls buying, 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 buying. A minute left. Let's see if that changes. Notice 27 did not even go below 26. My man Way Crooked, welcome back, my brother. I appreciate you too. Anthony said the beats are the only reason why he's here. I'll take it, man. I'll take it, man. Oh, and you're a music producer. That's dope. Yeah, I'm trying to get those shirts made. Dope beats, good vibes, decent trades. Come for, or how about this one? Come for the training, stay for the beats. That'd be a good, another shirt. I'm gonna make that shirt, guys. Good vibes, dope beats, decent trades. I love it. I just love it, love it, love it, love it, love it. But that'd be another great t-shirt as well, right? Come for the trade, stay for the beats. Okay, so Bear's getting momentum, which just shows you trading range price action. So let's see if there's buyers down here again. I will not be doing shit here. Gotta keep a sense of humor. How are we not going to touch that EMA? We got to touch the moving average, right? Would consider buying here. Be here. 5191.75. If we get there. The 5191.75. Oh. $51, 50.92. Yeah. Devin. Question from Devin. In a trading range, isn't liquidity just being built? Here's what I would say to you, Devin. Do you know what that means? Liquidity being built. Do you know what that means? I would say, what does a trading range mean? That's essentially what you're asking, right? What does it mean to be in a trading range? Can anyone tell me in the chat? Pop quiz. I hope you guys are not just here for the entertainment. Right? I mean, I hope you guys are having fun here. My goal is to make this fun for you guys, but you're not just here for the fun, right? You're here to learn and grow? Learn and grow like me? I'm here to learn and grow. How about you? I'm gonna assume you're here to learn and grow like me. So pop quiz, what was the trading range mean? Yeah, Alex, I swear there's no pop. You've got 100% A's. You've got A's on every pop quiz. Well, man, Alex is paying attention. Always paying attention, man. Alex is a straight A student so far. Okay, so Devin, look at what Alex is saying. We're looking for a push in either direction. What does that mean? Let's break that down, what Alex is saying. Alex is saying that if we're looking for a push in either direction, that means that we're going sideways, and that means that the market is not really moving up or down, right? Price agreement is another way of saying that, Monroe. Yes, exactly. Price agreement, okay? But what does that mean in terms of how the chart is trading? It means that, and my man Anthony got it right as well. Anthony, it means price failed to break out of a specific area. Yes, okay? So everyone, all of these answers are correct, okay? But what I'm looking for is what is actually happening when we're in a range. This box is a range, so everyone that's answered is correct. We're looking for a push in either direction, but what does that mean? It means we failed to break out of a specific area, but what does that mean? Price agreement, but what does that mean? It means, right, and here's the answer I'm looking for. Two-sided trading, okay? It means that the bears and the bulls are both participating. Two-sided trading, that's a trading range. So my man Devin has a theory. Okay, you have a theory about what's happening. Liquidity being built. But how does that help you, Devin? How does that help you trade? Well, it doesn't help you trade unless you know what the chart's doing, right? You have a theory about what explains what's happening in the background, but just look. This is my challenge for everyone here, okay? And this is a challenge for myself always, is can you just look at the chart and understand the game that's being played right now, right? Right now, the bulls and the bears are changing hands. Some people call that a rotation. We're rotating from bulls being in control to bears being in control. This is what I mean by two-sided trading. First, the bulls get a little bit of a move, and then the bears get a little bit of a move. And the bulls get a little, right? Move back and forth, okay? So that's my recommendation over some sort of theory about liquidity. Because just being very straight up here, it's like, well, liquidity being built, liquidity not being built, what the fuck does it matter? Right? You gotta know what the game is being played right now if you want to trade it, or what you're looking for, right? That's not to say that you should always be in a trade, but my goal is just to understand the game that's being played, and then I can choose whether or not to participate. First touch on the moving average. Been waiting for this. I did say that we could do it through a move down, or we could do it by going sideways for long enough and pulling that. Not a bad idea, Alex. And pulling that, pulling the chart towards it. It's just uncertain, right? It's just uncertain what's going to happen now. The rule for breakouts, if you're expecting a breakout to the downside, the rule for breakouts that I follow, okay, you decide your own rules, but the rule that I follow is we don't get the breakout until we see the breakout, okay? Meaning I'm not going to speculate. If I'm trading a breakout, I will wait for a breakout and then I will trade it. But I will not hope. I will not guess and hope. Guess and hope. Man, that's it. And oh my God, I've done that. I made that mistake so many times, guessing and hoping. Just guess and hope. That's a beginner, right? You guess and hope. If we're in a trading range, which is what we're in now, the only thing we can really expect is just a bunch of reversals. That's about it. I like to call it a ping pong pattern because we're just like think of a ping pong ball, you know, or like a pinball. Yeah, like pinball. Exactly like pinball. If you guys ever play the pinball, right? It's just kind of bouncing around inside, ping ponging about. And again, here's the reason why I'd be concerned about being short is we're making higher lows, right? Yes, we're making lower lows, okay, but we're also right at the moving average. Okay, if the bulls have been buying above the moving average all morning, okay, so since 6:30, 6:30, 7:30, 7:30 to 8:30. 8:30 to 9, 2.5 hours. The bulls are like, we are so confident in the price going up. We're going to buy above the moving average all morning. Okay. All morning. The second we get close to that moving average, what do you think the bulls are going to do? That's what's happening right now. You know, I wanted to buy down here, right? But we couldn't even get there. So we just keep redrawing those trend lines. And I wanna break out. I'm waiting for a breakout. Bulls bought one tick below here, scalped out for 4 points. So that's the game being played there. Remember, I said, you wanna see if you can understand the game being played. I can explain the game being played right here. I can figure it out. Look, 28. Went one tick below, 29 went one tick below 28. You see that? Let's zoom in. Do you see how 29 went one tick below, about one tick below? I don't know if it's one tick, but let's see. The low is 59.94.5. The low is 59.94.75. Yes, okay. So we went one tick below, right? Now, usually when they're scalping, they'll scalp around the ATR, okay? ATR is about 4.6. So look at the game being played right now. There were buyers one tick below 28 and they scalped out for 4 points. That's the game being played here. Okay. And that's typical in a trading range. Okay. So remember I said, if the market trends from the open, we will almost always go sideways for at least 15 bars, about 15 bars. Okay. Now we've gone sideways for 15 candles. This is on the 5-minute chart. But if we're going sideways, that means we're in a trading range. Well, when are we not in a trading range anymore? When we successfully break out of that trading range, and we haven't done that yet. So the bears could be doing the same thing that the bulls are, right? They could be selling near prior highs. And that's what bears will do in a trading range as well. But these moves are so small, man. I'm waiting for something a little better looking. I want something a little better looking, man. That's what I like to tell myself when the market's in a trading range. It's just all I can really expect is that we'll keep reversing. When and exactly how much, hard to say. But when you're in a trading range price action, that means lots of reversals. I like to keep it simple, guys. You know that. Yeah. Not a bad idea, Alex. Not a bad idea. there's this Buddhist quote that I really like that applies to trading. It's actually from the Tao Te Ching. And it says something about, are you willing to wait until the mud settles? Something like that. I'm talking about the mind, right? In meditation, when you sit in meditation and you see all the thoughts bouncing around in your head, right? Are you willing to wait until the mud settles? It's a Buddhist thing. But I like that for trading. Are you waiting to wait until the mud settles? If you are, I promise, you'll be happy. You'll be happier. That I can promise you. You'll be happier if you're waiting to wait until the mud settles. Okay, so let's see if there's buyers down here. I was wanting an actual touch of the moving average. Stream healthy. We're healthy, guys. We're a healthy stream. Speaking of stream, I gotta take a leak. No kidding. The 5092? Yeah. Right at that moving average. That's the first actual touch of the EMA. First time we touch a moving average. So we're in a trading range. What can we expect? Price the line, watch the reaction. In a trading range, you get close to that line, you bounce off it. Or you go past it a little bit, then you come back. Reversals, reversals, reversals. This is what the amateurs call chop. I hate that term because people use this as an excuse and they go, I got chopped up. I got chopped up. You'll never hear me say I got chopped up. If you say you got chopped up, it means you do not understand trading ranges. That's what that means. I hate to be harsh, but you hear people on YouTube, like these streamers, say that a lot. Oh, I got chopped up. I got chopped up. It's an excuse. In my opinion, it's an excuse. And maybe I'm being harsh, but trading's a harsh game. I got chopped up. You didn't get chopped up. You're ignorant. You didn't get chopped up. You're ignorant. You didn't get chopped up. You gotta do some more homework. Okay, so it looks like, remember I said watch the reaction, price the line. I'm gonna wait to speak. I'm gonna wait for the candle to close to say a goddamn thing. Good vibes still beats decent trades. Okay, I'm gonna take a bathroom break. I will be right back. Strong buying at the bottom of the triangle. If we're breaking out, the bulls will buy here. If we're still in a trading range, the bears will sell. No, notice that 31 closed above. Three candles. It's a strong candle, but we're in a trading range, so probably best to do the opposite. But I don't know. I can see it both ways, honestly. Because look at that. Just bounce off the EMA. I can see it both ways. And if you can see it both ways, we're probably in a trading range. So what happens if you sold this? Strong candle. Trading range price action. Sell it. Take profits at the ATR. I'll put you right here. Yeah. Why would I not take that trade though? I'll tell you why. Because we're in the middle of a trading range. You see where I drew this red box? This is like hands off. Middle of the trading range is the worst possible area. Worst possible probability. We want good probability, right? We want odds in our favor. If you're reading this as a trading range, then that's not a good entry. If you're reading this as a bull channel, which, you know, we did make a higher low. We made a lower low too, so. But look to the left, all that buying, right? And then we went sideways. So context for being long. But I'm not convinced. 30 is a strong close. But when the whole thing happens like that, oh yeah, that was the other trade. You could also buy 50% of 31. That's probably, honestly, if I had to take a trade, it's probably, yeah. Okay. So let's say you buy 50% right here. Because I'd prefer to be, yeah, I'd rather be long than short here, right? Because look to the left, because this. So there would be buying at 50% of this. Strong buying. But here's a question, guys. Here's the question. Will there be sellers here? Or will the bears, there's gonna be sellers here, okay? But will the sellers get trapped and will the bulls get breakout? It's possible, but let's see. We are a healthy stream. Okay, so $33 seconds. If this candle closes on its high, that's a good long entry. Let's extend this line. Remember, we've been saying all morning. Watch the reaction, price to line. So let's watch the reaction, price to line. Here's the line. Let's watch the reaction. breaking above it. So good. Possible long entry. But still in this trading range. Strong bulls. Strong bulls, strong bears. So, see what I'm talking about, guys? It's like rotating back and forth. Two-sided trading. Bulls, bears, bulls, bears. You get a strong move that looks bullish, but then it does the opposite. That means you're still in a trading range. What do we say? Guessing and hoping. God. Guessing and hoping. We don't want to do that. It's like, you know, when I started trading, I thought that's what day traders did. I thought that's what you were supposed to do, was guess and hope. That's what people think. And of course you'd think that. It makes perfect sense that you would think that that's how traders trade. Guess and hope. But then you learn, nah, that's actually amateur shit. Pros don't guess and hope. Pros don't guess and hope. You kidding me? Pros trade the signals. They wait for data. And then they use data that shows them evidence that a strategy that they've tested and back tested and know has a higher probability of winning than losing. And then they trade that probability. They trade based on the probability, right? Not needing to win, not needing to lose, not really getting caught up in winning or losing on a trade by trade basis, but just saying, okay, here's my system. My system says when this happens, this is what I do. They see that happen, then that's what they do. And then they let the chips fall where they may. They'll let the market tell them what's up. And then they just keep doing that. This is the difference between the amateur and the pro. Guessing and hoping, or trading your strategy according to your rules and procedures. You get what I'm saying? Super important distinction there. And something I really wish someone would have explained to me when I was starting out. Hope is not a course of action, just like David said. Yeah, exactly. Now, according to my strategy, if we're in a bull trend and we get 2 consecutive bull bars with at least one bid closing on its high, then that's data showing that it's reasonable to re-enter long. So it's reasonable to be long right here. However, I'm not convinced. Isaiah asking a question about a funded account. Isaiah, 3 rows of the chat. Introduce yourself and your city upon entering. So let us know where you're streaming in from, and I'm happy to answer your question. If you're going to be here, you got to follow the rules of the chat. Now, 3 consecutive bull bars. Not here, you can enter, right? Because that's a breakout, right? Like if you weren't convinced on 32, you could enter there. But boom, 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 there it goes, right? What I want to see is, as I said, what happens when we come into this area? Are there sellers up here? At the moment, we're back to long. We are back to trending. If all you did was when the market was trending up, right? Like this, if all you did was have the patience to wait until we touch that moving average, that's not a bad strategy. The first touch, as long as it's the first touch. Hey, Isaiah, streaming from Israel. Shout out to Israel, man. Those are my people. Okay. What happens after you pass the 50K combine? With which firm? You talking Top Step, Isaiah? Okay, this is what I was waiting for. Right? A tick above, right? That's exactly what I was waiting for. 1 tick above. Here's the thing. 1 tick above, right? And then you go for the ATR. So it's 4 points. That guy. That's my strategy. Sell 1 tick above, scalp for the ATR. In this case, 4 points. Man, and I would have taken that trade if I wasn't talking to Isaiah. The shit I do for you guys. Okay, so Apex. As far as I understand, Isaiah, and this is true for pretty much all prop firms. Yeah, like basically all prop firms. My understanding, all prop firms, once you pass, they keep you in a sim, but they pay you the same as you were in a live account. Does that answer your question? Wait for it. Now, if this is a weak close, now we can get it moved down. We're also just staying in this trading range pattern, right? Like, let's extend this. Okay. What would happen when you're at the top of a trading range? You would sell off. You'd bounce off the range. That's what range means, right? You stay kind of near the high, close to, at, or near the high. And if you're a bull, right? Clearly there were bulls that bought on 31, 32, 33. If you're a bull and you see 34, you excited? No, not at all. Big doji. Fifty 101. I said no problem, dude. I said no problem, dude. No problem at all, man. I'm here to contribute. And also, I don't give a shit about missing trades. Are you kidding me? There's no missing. I think me and Alex were talking about that last week or something. There's no such thing as missing a trade, in my opinion. Because there's always another better trade. Always. So I don't even. In fact, I'm happy to miss a trade. Right? Because the opposite is FOMO. So, like, you have to be comfortable missing a trade and think that you're not missing out on shit, because you're not actually missing out on shit. You're not really missing. It's a constant stream of opportunity. You're not really missing anything. It makes sense. Why would it make sense that you're missing if there's a constant stream of opportunity? That doesn't make any sense. Amazing to watch the bulls continue to buy. Makes it real tricky. $15 seconds on the candle. Will the bulls exit or will they keep buying? Notice last 5 seconds of the candle turns it bullish. That's the thing you got to be ready for, right? That's trading range price action. And also 1, 2, 3, 4, 5 consecutive bull bars. Okay. So now the case for the bulls becomes stronger because consecutive bars. Right. But still, we're in that trading range until we break out of it. And that's the bottom line. Yes, this is 1, 2, 3, 4, 5 consecutive bull bars. But we are, you know, inside that yellow box. And until we break out outside of that yellow box, even if we break out outside the yellow box, it's got to be a strong, successful breakout, right? So target here. Three minutes left on the candle. So far, buyers down here. Target here. 2.5 minutes left.
Purchase your track today.
2 minutes left. Bulls buying below bars. Bears trying to get some momentum. Bulls blocking them. Like, nope. So price looking like it needs to go higher. Reason to think we'll come up and test the top of the trading range, because that's what happens in trading ranges. A minute left on the candle. Let's see what happens. One, two, three, four, 5 consecutive bull bars. Assuming we close bullish, looks like we're doing it. Notice the bulls were buying below bars, right? And then pushing the price up in the last few seconds. It's tricky, guys. Don't get tricked. Watching what happens as we come into the top of the trading range. Very common to go a couple ticks above and then reverse back down. But 1, 2, 3, 4, 5 consecutive bull bars. So let's see. And this pattern one right now is it looks kind of uncertain, and then the last 5 seconds, the bulls start, accelerate those buys. So will the bulls get a successful breakout to the upside? Or will they fail and then reverse back down? We've been long enough. We've been sideways long enough to get trend resumption. And 1, 2, 3, 4, 5, 6, you could argue this is trend resumption. But the rule is no breakout until we see the breakout. Bulls getting that push up. All right, strong bulls. 1, 2, 3, 4, 5, 6, 7 consecutive bull bars. Strong bulls, right? Trying to get that push up, getting that push up. And what? That's all we know. They're breaking out of the training range, right? So will the breakout fail and will we reverse down? We don't know. But as long as the bulls continue to get closes, we're bullish, right? So it's like, for now, bullish. Let's see what happens in the next candle. If you watched each one of these candles, except for this one, the bulls bought right into the close. So it was like kind of a stalemate. And then as we got into the last 10 seconds of the candle, we got an acceleration up. you know, except for this guy. But it happened on this candle, this candle, this candle, this candle, and this candle. Actually, not that one, right? So successful breakout above the training range. Okay, so looks like we're going higher, but how much higher are we gonna go? Let's see. Option 2 is the breakout above the trading range. Fails and we reverse it down. That is an alternative. Okay, that could happen. Three minutes left on the candle. All right, guys, I've been on the live stream for hours. So I'm going to end this stream there. It looks like our short position is going to come back to break even, or maybe we'll make a couple points on that. We'll see. So, you know, decent session this morning, nothing crazy. You know, we went sideways pretty much the whole time we were on stream, right? So you got to work with what the market gives you. Got to work with what the market does. And when we're in a trading range, you guys see how I trade. You know, I like to trade on the edges, right? So when we get a tick or two above, a tick or two below, right? That's how I like to do it. And that's it, right? Not a lot that you can expect when we're in a trading range pattern, but the game of trading is aligning with the rhythm of the market. So if the trading range, if the market's going sideways, either learn how to trade a trading range or wait for the market to trend. And that's the sort of takeaway I think from today. All right. Thank you for joining me. If you want to get my 3 favorite setups, if you're curious about my strategy and you want to learn more about it, hit the link on the screen or hit the link in the description, tradesbybren.com/3setups. And you can get a document with my 3 favorite trades, as well as how I set my profit target and set my stop loss. And I also include a video, which I'll email you as soon as you sign up for that, which gives you live examples, and I'll show you exactly how to do it according to my strategy. Now, you got to trade your strategy, but maybe you want to take some ideas from what I'm doing. That's totally up to you. Thank you for being here. I'm here every Tuesday and Thursday, 7 a.m. Pacific. I'll see you guys next time. This is Bren. I love you guys. Thank you for being here and appreciate you. Until